Good afternoon, traders, and welcome to the Blue Line Metals Edge here for Monday, March 27th. I'm Philip Strebel, Chief Market Strategist at Blue Line Futures. Getting into the markets, it's a bit more a calming type of vibe for a session. We've got a bit of risk on here. You've got some stabilization. You've got a little bit less volatility. You got some of the demand-driven commodities are all pushing higher, and anything that's interest rate susceptible is all selling off. So your risk on vibe, cotton, crude oil, hogs are all going back up here. You got oats breaking out to the upside. Sugar market tracking some of that as well. And the same thing with the corn market. They're all kind of moving together on that increased gasoline demand, things like that. Bit of risk on. All your interest rate driven products here, like the lumber market hit by, as rates goes up, you see the housing market tend to come down, and you're going to see lumber prices go down with it. So you got the volatility index coming off, gold, 30-year bond. You got platinum. You also have the 10-year note, the NASDAQ, and silver. They're all selling off. All the different yields, the 2-year, the 5-year, they're all coming off with it. So looking out this week here, not a lot standing out. This is kind of your bigger data point here. The core PCE, that's what the Fed likes to use. They're expecting here, I believe it's going to be right around this 0.4% is what they're expecting. The last month was 0.6, so they're starting to look for inflation to cool. If inflation does heat up, you're going to see the Fed take a more proactive approach. So looking at market specific, this is the 10-year note. It's starting to roll back over. Here's your 200-day moving average. Here's the trend neutralizer level. This is kind of where the breakout occurred. You went into a bullish trend. And then since then, it's just not had a lot of action. Same thing with the bond market, kind of really backing and filling here. So here's your critical level support right around 129, 129.11. You got some pocket support there. We break there, you're probably going to see a bigger washout. Getting into the metals markets here, gold also taking a breather. I wrote an article on Friday, right when gold was right around 2,000 an ounce, saying that, hey, you might want to take some of the profits on here because this appears to be more of an isolated event, not something that's systematic and widespread. I know that it did hit a few banks, but those banks were they were either rescued, it went under, or they consolidated with another banking or financial institution. So it seems like it was isolated as one small area of banks, like some of these regionals that were not able to manage the risk, were not able to position themselves to be able to combat those higher interest rates. So those failed. So this event with gold, fortunately, I think it was a temporary event. So we're probably going to see gold futures pull back. I said there's a value zone, and I really think it's the 1935, which is your it's a 62% retracement from that low to high. But the reality is if we start scaling in too high, we could get ourselves in trouble, especially if gold goes back down to this 1800. So we're going to want to be a little bit more cautious. We'll probably look at options on there or just some hard stops. Silver correcting a bit with it. It does look a little bit better because if you get the demand picture picking up, silver futures could do better with that. Platinum's just disappointing, real sideways action. Copper's at least holding back up. It's kind of in this value zone here. This previous support level from before, it's kind of hanging out in this zone. I went over the bonds already. Some of these foreign currencies, Australian dollar doesn't look good at all. Looks like it's actually going to make a move where we're going to move back right down into those previous lows. Your pound actually has a much better chart pattern to the upside here. Canadian dollar should be getting a boost, which it is with the oil market. The euro currency is consolidating. You're going to see the yen come off because of the fact that it's going to have that safe haven demand comes out of it. Swiss franc's trying to figure itself out, and the dollar index is going to come off as well. So at some point, you'll see the dollar index will come off so much that will start to support gold, but I'm not sure where that's at. It's probably in the 1800s. Other commodities kind of standing out. Cotton, big reversible to the upside. Cocoa market making a new contract high. Sugar's just kind of hanging in right around these 6-year highs. And then you get into coffee. Coffee looked like it made an attempt, but it's really trapped in this range right now. And then natural gas continues to sell off. The grains really got some excitement. So take a look at Oliver's grain report. Also, he does a grain video and the livestock rundown. So you're going to see corn breaking out to the upside, soybeans reversing. Wheat looks a little bit better as well. Got to get above this level, 710, in order to do anything. Like I said, the S&P is really kind of trapped right here. Kind of a nothing day going on at the market. Markets feel tired. They feel tired of all this news that's been coming out at the moment. So, you know, if you got any questions, futures option trading, I still think like your best looking commodities to the upside right now. I still think corn looks really good to the upside. And then, you know, you got the Australian dollar back to the downside. And then some of these other markets, don't chase them. I think that gold's going to come back down. Same thing with the silver market as well. So, again, you got any questions, give me a call, 312-858-7303. Remember, futures and option trading does involve risk loss. May not be suitable to all investors. Good luck, good trading.